Hey folks, David Frost, My Strategic Forecast. Welcome for another episode of Common Sense Market Analysis. Today is Thursday, June 4, 2015. We've got a daily chart of the ES contract up. Okay, this is the S&P E-mini. And basically today we had a direct hit of one of our trend lines that we cited as good support. Let's zoom in a little bit on the 60-minute and just kind of see what happened, if we can. Okay, there we go. All right, so what happened yesterday? We failed up here at 2115. That's been ultra important, right? We keep talking about that. And as we failed, that didn't necessarily mean we were going all the way down to 2091, but we knew that 2105 was important because we keep talking about it, and the market fought 2105. Here we are yesterday. Early this morning, and then we rallied up a little bit, and this was at about 11 a.m., and then the market rolled over and went all the way down to the 2091, which you actually can't see on this chart because the volume is in the way, but it's over here. Let me go back to, what if I zoom in a little bit? Yeah, you still can't see it. I don't know why that is. Okay, so let's fix this up. Let's go back to the daily, and you can see here anyway. We hit the 2091. Actually, today, what was the low? The low was 2091 and a quarter. It's funny how that works. Okay, so there's still an unresolved 2085, but I was kind of pleased that we went down to 2091, and you'll notice that at the end of the day, let's go back. You know what? Let's go over to the spider chart because I have some stuff to talk about there too. So I want to bounce back and forth because I have slightly different things on different charts, and I think it's important that you see them both. I mean, why not? The more information you get, the better off you are. And let me just, okay. So here's the daily chart. Remember this triangle, and we broke out of it the other day, and then today, look what happened. We went right through it on the downside. And where did we come in? 209.74. The low today, whoops, I just moved that. 209.74. And the low today was 209.75. So it's off by a little bit. So is there another downside day? Well, you have this some kind of employment or jobs number tomorrow. Whatever it is, the market certainly reacts to it. And there are times when the market will actually get done what it needs to get done before the market actually opens, meaning the futures will do what they need to do. And they'll dip or they'll rally and then reverse after the market opens or even before the market opens. So we'll see. I wouldn't be surprised to see 2085, but you don't even have to see it after the market opens. It may happen before that. But if we do, and the market firms up on these numbers here, especially if we get back over 2100, then that should be bullish. And it should be setting up for the one more push that I keep waiting for, and it hasn't happened. But you'll see that what happens is we had a down move from this high here. And if you remember back in, this was at the end of May, the third week in May 21, that was a cycle turn. That was that Memorial Day cycle turn. And look what that turned out to be. I forgot about that. That was those three converging cycles that I discussed that weekend. And look what that turned out to be. That was the top. That's pretty interesting. I actually forgot about that. Nice. Anyway, it's good to know, right? So what do? We watch those three cycles for the next time that they come due, if you will. So you kind of put those on the calendar for later. They're not all going to converge necessarily again, but you put them on the calendar for later. Okay, so what do I have here? So basically, so let's think. 2085, back. I have to go back to the E-mini because I know the numbers. 2085. I don't really have an indication for a lower price just yet, and we may, but I don't have it. So I'm going to say that if we firm up here tomorrow, and maybe the release of whatever phony employment report they're coming out with, if the market reacts positively to that, then we may have put in another bottom here, okay, just like we did here, and all these bottoms here. And we may get that one more push I'm looking for. We'll see. Have to see how it plays out. Don't necessarily know exactly what's going to happen with the wild card of the jobs number and all that stuff. So, hopefully it's helping you that these lines that I draw in here are working out. 2105 worked out. They just work out. They're good numbers. So, this is it's good stuff. I mean, as long as these numbers continue to calculate, I continue to give them to you. So the transports were weak today. I talked about those. I had some numbers here on the transports, but that's not anything to worry about. Now watch this. Okay, over the last few weeks, I've been kind of opening up the door a little bit on some of the things that I don't normally talk about, right? So one of them had been, I don't talk a lot about it, but I've mentioned it before, which is market symmetry. And here you can see what I'm talking about. You can see this green candle here, and then you have this, this narrow candle here, and then you have another green candle that's like the same one from over here. And it's not like it's going to happen. I'm just not surprised when it does happen. And then if I see the market like trading up, and I know that the 20-period moving average was going to be a magnet, and that magnet equaled the same distance from this high to this low almost. You just kind of see it developing. Now, I'm not thinking the transports are going to get weak. I'm just thinking all we're doing is putting in, some sideways consolidation, maybe getting ready for another move higher, okay, after maybe 3 or 4 or 5 days of sideways move going higher. So who knows? But more often than not, the transports are probably going to follow the market, and if the market goes higher, you're going to see the transports higher, just like over here. Okay, so but that was just interesting information. Gold, it's just no good. There's nothing good going on here. I said that what was it? 1194 was very, very important, and look what happened yesterday. Yesterday, we hit 1195.60, failed, closed at 1184.90. Here, the high was 1196.40. The close was 1194.40. So that was above 1194. Maybe the number's 1195. Anyway, it was in that neighborhood, okay, and we failed. So it's just nothing good here. Can we find a low at this double bottom? Sure we can, but I don't know what the next move in. It's a very tough trade. There's no reason to fight a market. That's an important point, right? We sometimes we get attached to certain stocks or markets, and sometimes we even get vindictive with certain stocks and markets, and we're going to trade and we're going to win our money back or whatever the case is. We've all done that. The reality is when a market's giving you trouble or a stock's giving you trouble, the best thing you can do is leave it alone, because that market or that stock is going to win more often than you're going to win. If you're chasing it around trying to win because you lost before. So, I just sat back in my chair and I just took a gander at this stair step, right? So we had a down move, sideways, down move, sideways, down move. What's coming next is more likely than not a sideways, and I'll bet you we have a sideways at double bottom here. We'll see what happens. It's just conjecture. I'm just speculating. I just noticed it, just caught my eye. Let's go to, and the GDX, by the way. I know some of you like to talk about the GDX. There's nothing going on here. What's going on here? This is obvious, right? We broke down below the channel some time ago. Okay, we came down to the first trend line, all right? We bounced up, and what this really is making a bearish pattern unless we were able to at least close above the 20-period moving average, and then now we're failing, and where are we going? Well, it's pretty obvious. We're going to the next trend line, and the next trend line would put us at about, whoops, I just moved it. It would put us at about 1875. So that's what's happening in GDX. So not setting up good for gold. Oil, another down day in oil. So we had what we'll call a short-term pivot top here. 2 pretty good solid down days into the 20-period moving average. If we came down to this trend line again, I would look at it. but I'd have to see how we got down there and what was going on at the time, because I wouldn't just buy it indiscriminately. But you'll know from the discussion on the bonds, pardon me, I just had a coughing attack. Anyway, the bonds, when they came into that double bottom, I was shying away because the first hit didn't happen, and I didn't think it would hold. Well, this first hit did happen, and I'll make a decision whether or not that's a viable trade based on how it gets there. So that's where we are. It's a no trade right now, but if tomorrow we hit this, I would say that's a trade. In fact, I'll tell you right now that if we come down to this trend line tomorrow, if we came down to, in fact, I'll give you the number. If we came down to 56.51, okay, I would be interested in being long oil, depending on how it got there and all that. So, in other words, let's say what I'm not looking for, so you can stay away from bad trades. Okay, let's look at a 10-minute chart. I don't like that one. Let's look at an hourly chart. Okay, so let's say it came down to that number. What was it, 57.51 or something like that? I need to know the number. I forgot it already. 56.51, pardon me. 56.51, okay, and here we are. Let's say we came down to 56.51 down here. But let's say we came down there right away in the morning, okay, to this double bottom. Okay, that's a different trade, and that's a different pattern, a different setup, okay, than if we came, let's say, 2/3 of the way down, went sideways for 2-3 hours, and then came down to that level. That's not the same setup. That's not the same trade. I wouldn't take that trade, but I would take the one in the morning that came down to it before, let's say, noon, before 11:30 noon, whatever it is. That trade I would take, but the one later on that day after it hovered over there for some time, I wouldn't take it. So that just gives you a little tidbit. You're looking for a straight shot, and if I go back to the daily, so this is just a good chart lesson. It's nothing to do with oil. If you got 3 solid days that were all almost equidistant in volume, not volume. Well, yeah, volume and range, meaning high to low, trading range, daily trading range. Then 3 days in a row of the same nature on volume into double bottom, that's a trade. I'll tell you that right now. If it came down there in the morning, now. How do you protect yourself? Well, you have to have a stop, and you have to know where your tolerance is, and you have to abide by it, and that's basically the bottom line. But you have to give these things some leeway. But if the double bottom is to break, and it stays down there below that level here for any period of time, then it's probably not going to hold. It would normally be a quick and painless rip the Band-Aid off type of scenario if we got down there first thing in the morning. I don't know that this will happen. I'm just giving you a kind of a setup scenario. It has nothing really to do with oil, and if it happens on this chart, that's fine. But anytime you have a setup like this, like I just described, a lot of the same attributes apply. Okay, let's go over to the bond market, and we'll look at TLT. And TLT had a little shake and bake this morning. We went down, let's go to the 10-minuter. We went down, where is this? I hate that. Again? Come on. That's not fair. That was yesterday. Oh, no, we didn't broke yesterday's lows. Oh, you know what it was? Let me show you something. I know. I was looking at this morning, planning on talking about it later. The bond market, before the stock market or the U.S. equity markets opened, where the ETFs trade, so the TLT only trades between 9:30 and 4, but the bond market is a futures market, right? And it trades all the time, minus a little bit of time here and there. And so early this morning, the bond market went all the way down. In fact, let's look here. Okay, the bond market went all the way down to 150.7. And on a daily basis, it was down there pretty good. I want to even give you a better picture. Yeah, here it is. It was down there pretty good. You see, we sold off pretty good. And what they did was the fact that they closed above the lows from over here is This is a weekly. Oh, I'm sorry. This is a weekly close. No, we're into tomorrow. This is what we're looking for tomorrow. Not bearish, but not extremely bullish if we close above these lows here, or at least this one. But extra bullish or bullish if we close above the low of this week, last week here, okay? But we took a nice dip today, and then the market recovered, and from the lows, it was really a somewhat of a reversal day in the bond market. Now, I would have liked to see the market finish above this day here, yesterday's high, but we didn't see that. But this is a reversal day. It wasn't on particularly big volume, but it's a reversal day. So the bond market's trying to carve out some kind of a short-term low. It may or may not be done yet, but that's where we are. Now, if you look at the TLT and we zoom out here and we look at our levels, you know, we pierced through it yesterday and now we're back above it. So what the market's telling you that this level really is important. It's not to say this one can't happen, and I'm not sold on this anyway. So this is just a no trade. And why is it a no trade? I don't have to pick a bottom. I don't have to guess. And we're below all three moving averages. And unless I have a bona fide level with a setup and an indicator that tells me that there's going to be a rally, I don't need the trade, right? And, you know, I had it here if we came into the level. I didn't have it here, and I don't have it here. So we just move on and we find something else to trade. But we can talk about bonds. There's nothing wrong with that. Let's go to the dollar. Let's see what we've got here. Okay, so the dollar, this is a very interesting chart. Why? Because the dollar came in to, wait a minute. I want to change something here before I say any further. What we're going to do is we're going to actually see what kind of retracement we had just from this short-term move here, and you'll see, that's what I wanted to show you. You'll see it's not the same number, but it's close. 94.94 was the 618 retrace, and I drew this in pretty accurate. I'm not off by much if I'm off at all. And the low was 94.67. So what you did was, from this low, you made a pivot high. Now you sold off, and you corrected down to the 618. So you see how that works? While it looks like, and they're talking on TV like the dollar's collapsing again and the euro's rallying again, all it's really doing is retracing 0.618% of the rally from here to here. But they don't know that, and they're just discussing whatever's happening that day is what they're discussing and extrapolating out that that's going to continue to happen. So they make up reasons why it's happening. The reason why it's happening is the market was retracing. It's not all the other things they discuss about the dollar and interest rates and the euro and Germany and the ECB and this, that, and the other thing. It's none of that. The market trades independent of all that. The news comes after the fact, and this is proof, right? Would they be talking about the dollar in the vein they're talking about it today, for example, and yesterday and the day before, if it was going up? No, of course not. They would be talking about it going up farther. But I just find it ironic that if tomorrow we bounce off the 618, what do you think they're going to do? They're going to talk about another rally beginning in the dollar. Well, yeah, there's a rally beginning in the dollar, but it never really ended from here. This is just a retrace. Maybe. We'll see. I don't know. But I'm just trying to get the point across that it just frustrates me a little bit about the media, how, and I don't listen to them a lot, but today I did, and you can tell because I'm pissed off at the media because it just it irks me that they do the same routine over and over. And to me, it's obvious what goes on. I know it's not obvious to everybody, and I've been doing this a long time, and that's why it's obvious to me, and I apologize for that. I know how that sounds. But it has to be obvious that when you keep doing the same thing over and over again and it doesn't work, that it doesn't work. But that it's not obvious. All right, off that soapbox. Never mind. Let's talk about a few stocks. Let's get off the markets and go over to some stocks. Let me grab a sip of water. All right. Let's go to, let's talk about soda. I don't remember whether I talked about that one last night. I might be losing it. So if I did, I apologize, but we'll just do it again. Soda, I love this chart actually. So here what you had is this test of the low, okay? You did not breach double bottom, okay? So this is a successful test of the low, okay? And then you had a reversal. Huge reversal, right? You had a volume down day, and then you had a volume up day, and that's a reversal if I ever saw one. Now you tried to make new highs. You did, and now all you're doing is you're consolidating, and then the other day you came right into the 20-period moving average. Now you bounced off it. You stayed above this is the 50, pardon me. Now you stayed above the 20. So to me, this is consolidating underneath the 200 for a move through it. Remember when I said with the what was it, with the dollar or the bonds? It was oil. If I said that oil flushed down in the morning and came down into double bottom, that's a different trade than the one that goes sideways all day long and then goes to that level. Well, guess what? This is the same thing. So the 200 period was a little bit of resistance here, but it's going to be easier for the market to get through the 200 period moving average the longer it goes sideways underneath it. That's just the way it is. That's the way it works. Okay? So that's what I'm looking at in soda. Look at a longer term chart. Doesn't necessarily look the same, but you can see here that this was, some people like to call this a hammer. I never did. I don't know what this is other than a reversal. This is a reversal week, right? On a reversal week, what do you expect? You expect multiple weeks of upside, right? So this is what we're getting. We're going sideways. We've got 1, 2, 3, 4. And you count the reversal week, you got 1, 2, 3, 4, 5. And what have I told you? I've said on anywhere from around 5, 6, up to 10 candles in a row. Okay, and that doesn't count as much on the 10-minute. It does on the hourly and the daily and the weekly. But when you see that, you start looking for another move. So if we go sideways for like 6, 7 weeks, then I think that's setting up for another move higher. And how high would that go? Well, it should be somewhere equidistant to this low, from this low to this high, right? And then you would take the next low here on the consolidation from this low here up to whatever high that is. And it most likely would be about $24. That's what it looks like to me. So I'll take $24 in soda. That's what I see in soda. So hopefully that helps. Let's look at Microsoft. Nobody talks about Microsoft because Microsoft is like holding cash. Not really. So here's a weekly. We'll get to that in a minute. But the daily looks really, really good. Now, I don't want to come down and fill this gap. And I don't think we will because you've got an upsloping 50-period moving average. You've got a slightly upsloping 200-period moving average. You have a huge gap window down here at 46. All right. So I think you would get a bounce off that level anyway. And look what you're doing here. You had a huge up move, right? You closed above the big down move, so that negates this problem here. Okay. Now you're consolidating for what? Another move higher. 1, 2, 3, 4, 5, 6. So what are we looking for? Within the next couple of weeks, I'm looking for another move higher, right? Does that coincide with maybe a move in the market? Yeah, I mean, that looks good to me. It's not an indicator, and I don't use that as a technical indicator, but I'm just talking about it. It's of note. I know about it. It's important to me. Bank of America. Okay. What happened there? BAC. I'm doing something wrong. BAC. Okay. I don't know what happened to the chart, but let's get that back the way I like it. Okay. Yeah. So BAC on a weekly basis, let's zoom out first on a daily. Okay, so the daily basis has more upside, okay? It has more upside. I don't know if it has upside to 1850, but it might. But certainly, I think, is going to come to this gap window here and should fill this gap. Should fill this gap. So $18 is really my target. So we'll see, but that's my thought process. And you can see that this is in an uptrend now. So you're above all the moving averages. When you're above all the moving averages, you look for other signs to be bullish, right? So here's what you have. You made an up move, and you went sideways for what? 1, 2, 3, 4, 5. I miscounted. 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, so nine days in a row, and then you had an up move. So we'll see if there's another up move or we consolidate for another period of time. But that's what I'm looking at, Bank of America. But let's look at the longer term picture because it doesn't look the same. Now, you're going to have to come through this double top here in order to be bullish Bank of America on a weekly/monthly basis, right? So when I talk about the daily basis, I'm saying, in any period of time, you can wake up one day and Bank of America could be up 30 cents. It could close the day up 60 cents. It could open the next day up 50 cents. And boom, next scene shows you're at your target. And that happens in a day, 2, 3 days. That could happen. But on a weekly basis, what's happening here is, in order for Bank of America to get bullish on a longer term basis, to get $20, to get a 20 handle on it, to get a 25 handle on it, for something like that to happen, you have to get above this high. In order to get above that high, you need to come up on volume. In order to come up on volume, there has to be something else working, and it's just not working for Bank of America. What's the likelihood you're going to get up here? It's not very likely. I mean, what's the likelihood that you're going to bust through this pivot top, $20? It's just very unlikely. In fact, this is your weekly chart, right? Down move. This is a monthly chart, but you saw it on the weekly also. Let me go back to the weekly. This is your down move sideways. Now look at it on the monthly, how ugly that looks, okay? In order for this pattern to break, you have to close a month above 1803. If you don't close a month above 1803, this will go down this will go down to, depending on where it comes from, maybe $14, $15 tops, $14, something like that. That's ugly. I don't want that. But on a daily basis, by the way, we own it. On a daily basis, I'm looking for higher prices. So you have to separate the longer term vision from what might happen by next week, because they're not the same. Okay, so that's where markets are totally different that way, and that's why I trade the markets and invest in them also, because you can hold a stock for 6 months and get a 4% return, and I can trade the same stock 7 times in the same period of time and make 8 times that amount of money. So that's why you do both. Tesla, TSLA. Okay. What happened? Okay. TSLA. So Tesla, the reason I'm bullish on Tesla is because I actually think that you're going to challenge double top in Tesla. I think you're going to challenge 300, but we're going to have to get the rally in the market, which I still think will come. But in order to get that 300, while you need the rally, I think that Tesla being above the moving averages on the weekly and above everything on the monthly. I mean, look at this monthly chart. It just wants to put another month up in 3 months in a row. It looks like it wants to. I don't know that it will, but it looks like it wants to. And let's look at a retrace. Okay, let's look at where we are from here, from this low here that we put in up to here. Okay, we came down to a perfect 618. All right, and so my point was that a corrective move? So we had an A, B, C coming. We had a huge up move. We corrected it down to 618, or a huge up move, corrected it down to 618, and now we're poising for another move. The problem is you won't know whether that's 100% valid, A, until either it happens or it's happening, or B, you start to break down and then it's too late anyway. So, but my point is I think it's happening, and that's why I'm long Tesla. And on the daily chart, it just looks very similar to everything else. You're above all the moving averages. There's just no reason to be bearish Tesla. I know a lot of folks like to short Tesla. I don't know why. Anyway, I'm going to leave it there tonight. David Frost, mystrategicforecast.com. Thanks for tuning in. Thanks for being members, folks. If you have any requests or feedback, please don't be afraid to send it. It's my pleasure. Thanks for being members, folks.